Welcome to Cashflow Diary, a podcast where we discuss business, money, real estate, and the sharing economy. As a full-time real estate investor, entrepreneur, and all-around problem solver, I have had the privilege of developing individuals into powerful business owners. And today, the focus turns towards you. Our mission is to help you build your real estate empire by leveraging strategies to grow yourself, your mind, and your wallet. Let's get started. All right, everybody, welcome to another episode of the Cashflow Diary podcast. I am your host, Jay Massey. Glad that you are here. What we are going to talk about today is by far one of my most favorite topics, period. There is very little that I can think of that I would say that has had more impact on my business than, well, I don't know. I can't think of anything, to be honest, because this is the number one strategy that I used when I first got started in the real estate space to be able to make sure that I could get deals done. Many of you, maybe you know, maybe you don't know, when I first got started, credit score was 398. The 3 was in the front. And was squatting in bank-owned property. Said another way, with no job, no income, nothing, I needed a way to get to eat. And I felt shut out of the real estate market until I understood or was invited to understand a concept that I didn't know existed. This is one of the things what I'm going to say to you. On today's episode, what's going to happen for you is a lot of things you're going to learn that you did not know. Just because you did not know does not mean it does not work. It only means you did not know. And now you're going to be able to find out what I found out and what led to my first $5 million of capital that I was able to use to go out there and build a business. What strategy am I talking about? Well, we are calling it how to use Oprah, if you will. Other people's retirement accounts is what we're talking about today. And I'm excited because the gentleman who I have done the most of these with, I have with me today, and you're going to get to hear from him as we continue to talk about this particular strategy that you may never have heard of. Hey, Matt, I'm glad that you're here with us. Many people haven't heard from you before. Many people haven't heard of what you and I are talking about. They don't know what you and I know, that it is possible to be able to use other people's retirement accounts for their business, the new business that they're starting. Now, I know that's pretty far deep into the conversation that we're going to have today. So do me a favor. Could you tell the people a little bit about who you are, what you do, and most importantly, I want to know, how many miles did you run on, or did you ride on your bike last week?
It's actually a great question, that last one. Well, let me just say, I love this Oprah topic, other people's retirement accounts. Okay. We all know Oprah has a lot of money and she may not invest in your real estate deal, but other people's retirement accounts, guys, there is $30 trillion in US retirement accounts in the US. There is no place that has more money to invest in anything than US retirement accounts. And this is why Jay's talking about this topic and why,
Wait. Hold on. You said 30 trillion. That's with a T. How many zeros is that? Have you ever actually looked it up? Because I'm curious.
That is let's see, what is that? That's 9 zeros? Isn't that 9 zeros?
I don't know. I'm asking you.
In front of it? Yeah, that's what it is. So, it's not like we write individual checks for that amount, but
who knows? Yeah. They keep printing more money. We might.
That's true. But seriously, it's where all the money's at. And so,
how much is all the money, by the way? Because I think it's a lot too.
Oh, yeah. And it's also the spot where if you are raising money, you want to fund a real estate business, whatever business it is, I don't care, a startup, whatever. There's just more money in US retirement accounts than anywhere else, period. And if you're thinking of your friends and family and, someone you ride bikes with or run or do yoga with or whatever, it's more likely they got money in a retirement account to invest in your business or deal than they do in their personal savings or brokerage account. And so learning how this money can work is super important. But I'm Mat Sorenson. As Jay said, I'm an attorney. I've been doing this since 2006. I wrote the Self-Directed IRA handbook, which is the #1 book on the subject. I'm the CEO of Directed IRA. We have over $1 billion in assets under administration, and we handle these accounts. So we're like a Fidelity, but when you come here, you can buy real estate, invest in a fund, do a note, all those types of things that real estate investors like to do, or people starting up businesses like to do, instead of buying a stock, bond, or mutual fund. So, but it's the same retirement account, same rules apply. You just get to invest in the stuff you actually like.
So, Matt, let's get this started.
And I rode 50 miles on my bike on Saturday, Jay.
Thank you. I was like, oh, come on, that's the most important piece, bro. Because got to keep going. Got to keep going. When someone hears what you and I are talking about right now, because we're saying that 401k, or specifically that 401k or retirement account at their old job, if you will. Let's just start with those. We're telling them that money that's sitting there can actually be used today. Yet I know, and you know, the first thing we're going to hear is, but I'm not 59 and a half. My HR department didn't say so. I'm going to have to pay a penalty, and I'm going to have to pay a tax. So let's cover that real fast. What would you say to those who are thinking, but I can't do that?
Yeah, the first thing is just get educated first, is my first piece of advice. Learn something, okay? Doing this is not rocket science. It's more like playing a board game. You need to learn the pieces, the steps, and what to do. And to do that, you can read a book, my book, or you could play with someone who's done it before that'll show you what to do and walk you through the steps and how you roll the dice and all that. So the first thing is the old employer 401k is always fair game. If you're not working at that employer, you can move that money wherever you want. You can move it to a brokerage account at TD Ameritrade. You could roll it to Directed IRA at our company to invest in real estate or a small business or a fund. So old employer 401ks are always fair game. No penalty, no tax. You're just moving from Fidelity to Directed IRA or Morgan Stanley to Merrill Lynch. You're just changing the custodian of the account, to get to someone who will let you invest in this type of stuff.
Now, when you say the word custodian, there's a lot. I just want to make sure that everybody can come along, because we're creating opportunity where none previously existed by just shining some light on what's always been there. In fact, I often tell people what we're talking about. It's been around since 1974, which I think is a perfect year because it was the year I was born. And it still is in effect today. So when you say custodian, can you give us an understanding of what that means? And more importantly, how come TD Ameritrade isn't having this conversation?
So custodian, you have to have one for an IRA account. So like Jay said, 1974, retirement accounts are created. For IRA accounts, you are required to have a custodian by law. That's either a bank, a credit union, or a trust company, or a broker-dealer specifically approved by the IRS. So we're a trust company at Directed IRA. Now, a lot of clients come back to me with like what you just mentioned of, they're like, Matt, I wanted to go buy this, Airbnb down the street, this property. I want an Airbnb. And I called Fidelity and they said, I can't do it. They said, I can't do it with my IRA. And I'm like, well, that's not because you can't do it with your IRA. That's because you can't do it with a Fidelity IRA, right? Hey, Fidelity is a broker dealer. TD Ameritrade's a broker dealer. What do they let you buy? What they sell. Okay. If you go to TD Ameritrade or Fidelity to try and buy real estate with your IRA, it's kind of like you went to Arby's and asked for a chalupa,
Arby's,
it's not
bro.
on their menu.
Arby's, really?
Right.
Okay.
I just started to throw a laugh. Yeah, I said Chipotle or somewhere, Arby's,
It's fine. It's fine. It's all good.
Kind of old school. I want them to be the Arby's,
It's totally fine. Totally fine. I mean, I at least thought you were going to go say In and Out or something, but it's all fine. It's no big deal. No big deal.
You know what I mean? You've got to get to a place that has it on the menu. So it's not that you can't have a chalupa. You just aren't going to get it from Arby's. And they sell roast beef sandwiches, just like Fidelity sells stocks, bonds, and mutual funds. That's what they're going to let your retirement account get. If you have an IRA at New York Life or Northwestern Mutual, what do they let your IRA buy? Annuities, because that's what they sell, So you got to get to a custodian that'll let you, quote unquote, self-direct. And something's called self-directed IRAs. And that's, of course, what we'll let you do at Directed IRA.
And these terms that we're beginning to use, self-directed IRA and custodian and all of these things, I can remember when I was first learning this, and I don't know if you know this part, I was actually a financial planner at the time.
Yeah.
So I'm licensed. I got Series 6, 63, 26, and life, health, this a whole bunch of things.
Yeah.
And I'm hearing this going, none of this was on the test. Right. What are we talking about here? You can't do this. Yeah. And there was this cognitive dissonance that I was fighting through to be able to go, okay, I guess this can work, because the person who's listening, who this sounds hopeful for, what it comes down to is there are significantly less limitations around accessing this capital. So talk to us a little bit about when going down this route, what are some of the shortfalls, or is it a credit score issue? What prevents people, other than not knowing, is there something that's prohibited that they can't do?
Yeah, there's a lot of people out there trying to protect you from self-directing your retirement account. All right.
I like that. So you got the protect in quotation marks. Yes, absolutely.
Yeah, and sometimes it's a financial advisor. Sometimes it's a CPA who doesn't know what the hell it is, but that feels like they look dumb now. Sometimes it's an attorney. And so financial advisors, if you think about it, they're disincentivized from knowing this. A lot of times, they're not going to buy a product that they'll make. Your IRA is not going to buy a product that they make money on. Or if maybe they have an asset under management thing and they're pulling $500,000 out of your IRA that they manage and letting it go over to do a real estate deal, they might still call that assets under administration they're going to manage and make money. But man, it's a little more difficult. They've never done it before. They got to learn all this stuff now. You're the only client or two that's doing it. Your account doesn't pull up in their regular stuff and reporting like all their Schwab accounts or wherever all their other clients are at. And so you're kind of doing something different, and it's making them have to do more work. So they're going to try and talk you out of it. And but the financial services industry has really just dominated retirement accounts because it's easy. Because when someone sets up a 401k, they say, well, how old are you? I'm 35. Okay, we're going to put you in a target date fund that says when you hit 70, 65, you're going to retire, and we're just going to pick stuff to buy for you.
Right.
Okay. And then all of a sudden you got $300,000, $500,000 into the account, and you don't even know what it's in.
No, you're not. And what's happening right now is that I know that some people, they're still feeling though, like we don't like, or does that mean did I do something wrong? And I don't think that's what you're saying. I just think there's a case of that saying that if you had known or had all the options at the beginning, you might have made a different choice. Would you agree with that?
Absolutely. And let me give you an example. This was a big moment for me in my career. I was an attorney helping clients self-direct their retirement accounts. And I ran across a client that was a real estate developer. Mm-hmm. Long story short, he wanted to use a Roth IRA to get an option on a piece of property. He invested 10 grand, sold the option in 3 years, made over $1 million. This all went back tax-free into his Roth IRA.
Right.
Now, this client was pissed when this happened. Okay. He was not happy about this because he's like, why did no one tell me about this sooner? He's like, I have a financial advisor. I have a CPA. I have the big law firm. They all knew I made a ton of money doing real estate. Not one of them told me I could use retirement accounts to do this. He's like, I got retirement accounts invested in mutual funds. I don't even know what they are. And I'm like printing money over here, doing what I know, investing in what I know.
And see, that is the angle I have literally built my entire career around. For those of you who are listening, what I want you to hear is by being the champion of, hey, here's another option. That's basically me. You can help individuals do things that they otherwise may not have had. But Matt, when it comes to the, we'll say the returns, the numbers, the things, because the one thing I do know, there's no such thing as a safe investment, but in general, I'm assuming it takes a little bit more knowledge, understanding, control. What are some of the things that you've seen where people have messed it up?
Okay. I would say the first thing is remember this is for investment purposes. Okay. So when you're using a retirement account to go buy real estate or invest in a business, this is not buying real estate for you to use. Okay. We're not talking about buying a second home or an Airbnb on the beach you're going to stay at yourself when no one's there or your kids. Or
But why
something.
not, Matt? I need a place. I need a second home. Come on.
Because the IRS has a set of rules that says you can't do it. All right. It's in the code. It's 3 chapters in my book. And it's basically the point of it is when your retirement account's making an investment, it's just investing. It's buying something that can create rental income or gain when you sell it or interest income or whatever it may be. But it's not making you money personally today. This is your retirement account. It's not giving you personal use of this asset. So that's the first thing is buy this for investment purposes. Don't think of your rating your retirement account to go buy a second home or even a primary residence. We're talking about for investment assets.
So when you say that though, because again, and this was the key because there's a lot of people who are probably listening and they're thinking about their retirement account, that this helping them. Yeah. It's been my supposition that the bigger idea, better idea is for the entrepreneurs out there to know this as a funding source for their business and their deals. Could you speak to that a little bit?
I'll just give you an example. At Directed IRA, we had a hedge fund come to us that had, like 1,000 people of their existing investors that had invested in something with them. And they had not told these people that they could use their IRAs in their deals. We did a webinar with them and did some content with them. They got about a 30 to 40% ratio of people already invested with them that just wanted to use retirement account dollars in addition to the personal dollars they'd already invested. So a lot of times you're just talking to the same people you're already talking to that may have already invested with regular dollars or that were interested, that were maybe a prospect to you or a contact, but just didn't have that amount of money available, but they do in their retirement account. And so it's this super powerful tool. And what we like to talk about is like unlocking this money. Because if you think about it, it's a win-win. One, if you're raising money for a business, a deal, a startup, whatever it is, you need capital, $1 trillion in US retirement accounts. It's individuals all over the place that have this. Think of your uncle, your neighbor, your friends. Seriously, just like the regular friends and family you're going to go to. Just really think about it. How much money do you think is more investable that those people have? Their retirement accounts or their savings and brokerage accounts? It's in retirement accounts. And just being able to say, you could use your IRA to invest in this or an old 401k you got laying around. People are like, I'm in, man. That money was just this sleepy money that they just forget about.
Sleepy. Yes. Well, and that's the thing
that's what Wall Street wants. They just want that sleepy money to stay over there.
And that's what I've found too, is that it's almost if there's such an emotional disconnection from it. I mean, the very same person you could be talking to will say, I don't have any money to invest. And then you could just simply say, do you have an old 401k somewhere else? They're like, yeah, but what am I going to do with that?
Yeah. They're like, I thought I could just buy stocks and mutual funds.
Right. And it's just been one of the best things ever when it comes to getting things started. So I know that there are a number of different structures. There are a number of things, and I want to talk to just how it actually works. So what is that process? When someone's listening right now, they go, okay, cool, I have a 401k somewhere. But are we talking about that? Yes, we're talking about that. So what do I need to do? What does that process sound like, look like? How long does it take?
So let's say that they want to invest in someone's fund or startup or company, okay?
Or short-term rental. No, I'm messing with you, but yes, go ahead.
Yeah, someone's raising capital for something, okay?
Yes.
Someone else has a retirement account that wants to invest in that opportunity.
Yes.
Okay, so the person with the retirement account has to identify, can I roll this money over? And then you basically got to pick a custodian, and I'll walk through that. The first thing is, can I roll this money over? Because most people are currently sitting at TD Ameritrade, Schwab, Fidelity, Vanguard, like those big companies control like 80% of the retirement account market.
Right. And their statements is in the junk drawer at the bottom, unopened, but they're stacking up. They know exactly where it is, but they haven't looked at it in a long time.
Yeah. And so they'll have to contact them and realize, okay, now if it's already in an IRA, whether it's a SEP IRA, a traditional IRA, a Roth IRA, if it's already an IRA, you're good to go. You're just going to go set up an IRA at a self-directed company, like ours is Directed IRA. And then you just say, hey, Directed IRA, I've got a $300,000 IRA at Fidelity. I want to send 100,000 of that over to you guys. Or you could send all of it, partial, whatever you want to do. We send a transfer request. This is the custodian to custodian. Fidelity's a custodian. We're a custodian. And then Fidelity is going to send us the 100 grand. Now, if you're in stocks or mutual fund, you'll have to sell that so it's available in cash. Then that money is going to come over to us at Directed IRA. Now you've got an account with us and you're going to say, all right, here's this short-term rental deal I want to invest in. And we're going to say, okay, what type of deal is it? What are you doing? Because there's lots of different ways you could do that, right? Like, well, I'm loaning someone else money on a short-term rental. Okay, that's going to be a note. And we want to see a promissory note. Maybe it's secured on the property. We want to see the documents, and then we're gonna fund it and send the money to that person on that deal. And then your IRA owns the note, for example, and it gets paid back principal and interest, whatever you negotiate. Let's say you're going to just buy the short-term rental out directly. You're going to own the short-term rental with your retirement account. Then your IRA could just buy the property and be on title directly. Or what a lot of clients do is they'll have their IRA. Again, this needs to be self-directed, own an LLC 100%.
Yes.
And that LLC owns the short-term rental. Okay. And that's a little bit lengthier process, but we can dive down either one of these longer. Mm-hmm. The third option I would say is, let's say it's someone else's fund or LLC or whatever. Your IRA can invest in that. And there's usually like a subscription document that says, hey, I'm buying this many units in your fund. It's going and doing whatever, it's a startup. It's a bigger real estate deal. It's a pool of short-term rentals, whatever it may be. And so if I'm raising money in real estate, right? For short-term rentals.
Yep.
And I run across someone with a self-directed IRA that wants to invest, I can do one of those three options. I could say, hey, you want to loan me money? Maybe I've got a fund that's doing short-term rentals. Do you want to come into my fund?
Yep.
Or do you want to just buy short-term rentals with me and maybe we partner in them or however you want to do it. And, or I'll sell you the short-term rental or whatever. I mean, they could own the short-term rental 100% or a partnership interest in it too.
I love that. Now, I know that my personal favorite is the IRA LLC from an execution standpoint. That's because you can move quickly and faster. But is there? You've been doing this for long enough now to have developed preferences or the plus and minuses, if you will, of, hey, this is probably the better structure for most people.
Yeah, I think it depends on how you're going to invest at the end of the day. Mm-hmm. If you're like, I'm going to buy the short-term rental and own it myself, do the IRA LLC, and we'll go down that. But if you're like, nah, I'm just loaning someone else money on their deal, just do the note out of your IRA. You don't need an LLC. We're going to process it once. We're going to send a wire to them. They're going to send payments back to your IRA. You don't need an LLC necessarily. It doesn't benefit you that much administratively or asset protection wise on a note. Or if you're investing in someone else's fund or subscription, right? Like you don't need an LLC for that. Just go subscribe, get the units. Your IRA owns it. They send back profits to your IRA. But when you're going to own a short-term rental, this is an active investment business type thing, right? There's checks that got to get cut. There's tenants that got to be dealt with. There's repairs that need to get made. There's a rehab maybe. There's a lot of things involved in there. And so when doing the IRA LLC, rather than your IRA owning the property directly, where you'd have to go through us to say, hey, send money here from my IRA to pay that guy. Hey, did the rent come in from this on that? Hey, I got to sign this contract for this contractor to, fix the toilet. You don't want to do that. We don't want to do that. We like the IRA LLC.
No doubt.
So we have the IRA own an LLC 100%. You can be manager of the LLC. You don't own the LLC though. Your IRA owns the LLC 100%. Your IRA gets all the money at the end of the day. but you can manage the LLC and you have an LLC checking account. It's just a regular LLC business checking account. We're going to invest money from the IRA into the LLC, goes into this LLC checking account. You're manager of the LLC now. Now the LLC goes out and buys the property. The LLC is on title. The LLC cuts the check. The LLC rents it out. The LLC pays the contractor. And you're just cutting checks, receiving the income. You got to follow all the rules in the LLC. You still can't use the property and all that. But the LLC gives you kind of this quote unquote checkbook control and a little more authority and control of your asset to just make sure it's administered and stuff's paid, and you can just take care of it better.
Absolutely. And Matt, I again, as you know, I'm a fan of this. In a moment, what I want to do is that I want to talk about some of the other types of accounts that can also be used for this, because I think as we do, people will understand. Okay. And we'll do that in just a moment. So for those of you who have just joined the room or you're listening for the first time, know that we have decided in our second season now, what we're doing is that we are doing lots of podcast recording live. So make sure you join us on Clubhouse if you've not heard of it yet, to be able to join live into the conversation, because in a moment, we'll be able to take some questions for those who are here, and they'll be able to ask Matt, get some of their own questions answered as it relates to going and executing this strategy, getting the deals done, and making it happen. So also make sure that you have not only followed us on Clubhouse, but if you want to make sure that you have the opportunity to get started in the short-term rental business, what you want to do is you want to go to cashflowdiary.com/blueprint, cashflowdiary.com/blueprint. That is an 8-hour training, absolutely at no cost to you, and you will be able to get your first short-term rental. So go get started. So Matt, as we're talking and going through this, there's possibly one of the things that I get excited about. I get excited about some of the other types of accounts that can also do this. Because yes, we've talked about retirement accounts, but I also know from a healthcare perspective that there are other accounts and education perspective. Some of those are qualified accounts. What other type of accounts have you seen your clients be able to use to, say, execute this strategy to make sure that their future is taken care of in some way?
So HSA would be a pretty popular one.
Yes.
Health savings account. So you can self-direct a health savings account, where you're putting money in this health savings account. You get a tax deduction when you put it in. You can invest the money and it grows and comes out tax-free for all your medical. And that's at any age for your medical.
You know what? I almost feel like we need to be just have a moment of silence for that one, because that just sounds so I'm just like, what did he just say? Yes.
It's special. It is very special. Because it's unique in that, if you think of a Roth IRA or Roth accounts, which we love because those grow and come out tax-free, but you don't get a tax deduction when you put money in Roth accounts. The government's like, yeah, we're giving you a sweetheart deal on the way out. But HSAs are unique because they let you get a tax deduction when you put money in. No matter income, you can be a high income earner and you're still getting the deduction on the HSA.
Oh, say that part again. Say that part again.
Yeah, you can be a high income earner and you still get the deduction on the HSA. There's no phase out on it. And then that money grows and comes out tax-free for your medical and your family. So it's a powerful account. Now, most people's HSAs are literally in a money market account, or maybe it's in the stock market, but you can self-direct it too. I mean, we have had clients that do a lot of real estate deals with HSAs. So definitely an HSA would be a popular one. But you can do covered education accounts, ESAs. You can self-direct those. We have those accounts at Directed IRA too. But what I was going to go back on too was the 401ks, because I started with the IRAs are easy to self-direct.
Sure.
401ks are too. And we talked about this at the beginning, that the old employer 401k is always fair game. You can move that to a self-directed IRA. The current employer 401k, let's say you're out raising money, or you're, and you're like, hey, or this is you yourself, I want to invest in this thing, in this opportunity. I've got this old 401k at Vanguard, I've got this 401k at Vanguard, but I still work at this employer. This is my current employer 401k and I'm 40. Can I use the money? No.
Maybe.
Yeah, maybe. Yeah, maybe. There's a possibility they could do what's called an in-service rollover. But the general rule of thumb is current employer 401ks are locked down to the provider your employer picked, who's generally going to just let you buy mutual funds or maybe stock. And so once you hit retirement plan age, though, that is either 55 or 59 and a half, depending on your company plan, what they pick, even if you still work there. So like, let's say, you're 62 and you've got a current employer 401k and you want to roll some of that money out to self-direct, you can still do it even though you still work there. So that one's always open if you're over 59 and a half. So just know the current employer 401k can be a little tricky.
What's funny with the current employer 401ks, my number one rule of thumb is don't go ask HR because they don't know. They didn't read it.
Yeah. They're trained to say just no. And this is what you do if you're in HR and you don't know, you say no, like
nobody gets fired for saying no. So,
exactly.
It's not their job to help you be a great steward with the assets that you have. That's literally not their job. And the summary plan description actually is the thing where you can find out exactly what's going on. But most people don't read that document, man.
Yeah. Let me give you an example. I had a client. She was a pretty high up executive at Wells Fargo, corporate, like executive level, had a pretty large 401k there, worked there for years. I'm talking like a 7-figure, retirement account. And she was trying to just roll some money out. She wanted to self-direct my real estate. I mean, it took her 2 or 3 months, but she eventually got it out because she literally went to the CFO. Literally the CFO's office is like, I need to get this out. And everyone gave her the no. But she was high enough that she could get the real answer. So sometimes just know you might have to break through the no, you can't move the money out. Now there's some technical points on this. It's called an in-service rollover and what you can and can't roll out. It's kind of confusing, but it's the employer match that's fully vested. Under retirement account rules, you can always roll that out no matter your age. It sounds backwards, but it's the money the company puts in that you vested for you that you can actually roll out.
Wait. You're saying it's what?
Yes.
Okay, hold on. You're saying the money they put in is stuck. The employee's money is stuck, but the employer's money can come out?
Exactly. I know it sounds backwards.
No, that doesn't sound backwards. That is backwards. That doesn't sound backwards. That is backwards.
That's how it is.
Okay. All right. I didn't know that. I've not done many in-service distributions because most of the time there's more than enough money at those old 401ks. But that is okay.
Yeah.
That's
it only
backwards.
takes a retirement account lawyer to know that dumb stuff. But, and sometimes, honestly, I even have clients and I'm like, go ask, and they go ask 5 questions and they can't do it. But you have to be persistent and just know if you really need to get technical and you have a 401k, this could even be a 403b, it's generally the match or the employer, or sometimes the profit sharing component the company puts in that is vested, that you can roll out.
That's wrong, but okay, no problem. Just gonna play with the rules here. So
that's you play the game on the before you. That's just what we're dealt, or the hand, I should say.
While we're talking about this, I want to talk about an asset class that you and I have not talked about ever, but I know that people want to know. So I'm just going to be very direct. Can I buy crypto, Matt?
Absolutely. Yeah.
Oh, okay, good. Just checking. Because I mean, when I say it, I get pushback. I'd just rather you say it.
Yeah. Your IRA can own crypto. And we have thousands of accounts here of clients that have bought crypto with an IRA. We have way more real estate stuff, but crypto has been the most popular alternative asset in the last 5 years, super popular. Even after, the, whatever you want to call this market downturn, whatever.
We'll just call it the roller coaster.
If you bought in 2020 or 2021, it's a correction. If you bought, I bought crypto with my own IRA in 2017. So what I was doing is I had a rental property that my retirement account owned, and I had enough cash flow in there. I had maybe like 20 or 30 grand. It wasn't enough to buy another property yet, but I was kind of getting antsy with the cash sitting there. And I had a ton of clients asking me, can I buy crypto with my IRA? And this was like 2017, like Bitcoin was $2,000,
Yes.
And so I was like, well, you can. I researched the rules on it from a retirement account rule perspective, but I'm like, but I had no idea how you practically do it.
Right.
So I went and did it. And I bought a bunch of Bitcoin in 2017 with my retirement account. And it was the best experiment I ever made.
Yes.
Yeah. Even now with the market down. And so since then we've been helping clients, and now we have a product through Gemini. We have.
Oh, you're using Gemini. Okay.
We use Gemini. That's the wallet and exchange. And so our fee is $295 on our self-directed accounts and on our crypto accounts. But crypto accounts have a 0.5% trade fee. Most of the industry is at a 1% trade fee on crypto IRAs, but we have a 0.5%. But our regular self-directed accounts doing real estate, it's just a $50 processing fee when you make an investment. It's just a flat $50.
Sure.
Crypto is super complicated and technical, and our security requirements and IT requirements are much higher. So
I can't even possibly begin to imagine. Let's expand the possibilities in the minds for a second. We've talked about real estate. Now we've covered crypto. What are some of the other things that people, not containers? So, because this is always confusing. I find that many people, if you ask them, do they have a retirement? They'll say, yeah, I got a 401k. And I'm like, okay, you have a retirement account, but not necessarily a retirement plan. Those are two different things. What are you going to do with the money is really what I'm asking. And they keep describing the container, not the content in the container. So I tend to think of the 401k, the HSA, the ESAs, that's the container. And then what you put in the container, that's the content. So a cup can hold water. Water is the content, cup's the container. My question to you, sir, is what other types of flavored water do we have outside of crypto? We've got real estate. We've covered business. What else have you seen people do that could be exotic or possibly something that someone's not thinking of?
I would say private funds and private stock is probably the second most popular.
That makes sense.
So we have a lot of people that raise money for deals. This could be, I know you've done it in the past, Jay, and like they're just raising money. They're buying an apartment building.
Yep.
You're starting up, it's funny. I kind of review some of the private placements that are new that come through. And there was one, let's just call it a performance enhancing a drug for men in the bedroom product.
Wow.
It was out raising money. So I had some people investing in that, I think, I don't know, but it was, this is like backed by doctors and everything. So, but I mean, we see everything. We just see, I had a client invest their IRA in a Mexican soccer team. It's like a legit, big stadium soccer team, 100,000 people show up at those things. We've had clients buy tons of interesting stuff, but I'd say the real estate's the number one in terms of popularity. Private funds and private companies would be number two. Mm-hmm. Right now, crypto is further down the list. Crypto was a lot more hot. It'd probably be number two last year.
Which is funny. Now that it's on sale, no one wants it, but whatever. That's a whole nother story.
Right. Yeah. Buy low, sell high. Buy low.
That's what I thought, but hey, whatever.
Yeah. So other stuff we just see is kind of just small businesses. People, investing in someone else's small business in their community. Someone's got whatever. This could be, we've seen last night I saw a pool service business. Of course, you see the restaurants and the gyms. Just think of Main Street America businesses. People's IRAs are being the cash partner in those deals too. Buying franchises, being the cash partner. We had one doing a wild buffalo wings or wild buffalo wings. Is that what it is?
Buffalo Wild Wings, I think,
Buffalo
is what you're
Wild
after.
Wings. Okay.
But it's okay. It's okay. I can't exactly say their wings are any good, so it doesn't really matter.
Yeah.
It's all good.
But they make all the money in the liquor. I learned because that client's been investing in it for a while, and they've done super well.
Love it.
Also, just any of that stuff. It's just all these investment assets that you think of outside of retirement accounts that people really build wealth in America, because if you think about it, and I just, as an attorney, I've been an attorney almost 20 years now. It's been 18 years.
Matt, you're getting old.
I know. I can't believe it. I've just worked with so many clients. We have $1 billion in assets now at Directed. I feel like I've seen more of it now. People make money in 3 ways. Real estate. They build wealth doing 3: real estate, business ownership, and paper assets. You can call it the stock market, whatever, that type of stuff. But retirement accounts, everybody's just been like paper assets. I'm just saying, no, the small business, private investments, private funds, crypto now, real estate. This is stuff. And real estate has so many varieties, of course, from short-term rentals to notes to multifamily. We have people buy tax liens. I had a client buy air rights with a retirement account. You know what I mean?
It's funny you bring that up, Matt. One of my new, I haven't told you this, but one of my new favorites that I've been collecting, that's how I look at it, is song rights. It's been one of my new favorite things to collect is song rights because of just how they work and how I'm not really thinking about the economy. In that case, and being able to buy them at certain yields where it's just like, oh, this is good, you know?
Yeah. Well, even here's one. We've had a number of clients invest in like movies and, I am not
that brave there. Movies is where, okay. Yeah.
These are like Netflix deal things, sometimes they still don't make money, even if they get on Netflix, but I just everything that's out there in the world, this is what people are investing in. But what I say though is, and this is a little word of caution, just because you can doesn't mean you should.
Right.
Right. So you still want to invest in what yes. Get in what I'm always telling like our clients and just kind of people with the accounts, like figure out what you know and like.
Yes.
Get educated on it. Get a better connection with your money. It is more satisfying. There's so many people that have hundreds of thousands and even somewhere they all have 7-figure accounts and they don't even know what the heck's in it. They're so disconnected from it. It's so much more enjoyable to get connected with your money, to building the wealth, investing in the things you want. It's so much more satisfying when you win at the end of the day and when your account's growing. Seriously. And you become a better person. You'll learn something.
I agree. And your tax bill also goes up. Tax preparation bill also goes up a little bit, but that's okay. I think it's a worthwhile trade-off.
Right. That's a sign of success.
Said the guy who I'm not even going to go there. I'm just saying that's funny. But yes, I agree. That's one of the many things that I think stops individuals from exploring this further. Is like, okay, this is so different. Now my IRA's got to pay, file taxes, or I've got to do that. There's just so many different things. But yet at the same time, it's been my experience that the more responsibility we take, and as you said, what you call a better connection, the better connection we have to this, it's just been my experience that the sooner we can hit that quote unquote retirement stage. Now, with that being said, in recent years, there's been a lot of, we'll call it political talk about the rules around these and either making it go away, changing how it works. Catch us up on exactly where things are now with that.
Yeah. Okay. Well, it started with $5 billion. Okay. $5 billion.
Oh, is that all?
A Roth IRA of Peter Thiel. Okay. So this was
of course.
Peter Thiel.
But I think you're stressing the $5 billion Roth IRA part, though. That I don't know if everybody caught that part because that's already there. That's kind of, Mm-hmm. Go ahead.
Yeah. So somebody has a $5 billion Roth IRA if you didn't know.
Right.
And that's Peter Thiel. He's a big Trump supporter, super successful Silicon Valley, PayPal mafia guy. He's done so many quite awesome things. Let's be honest. In addition to he was the first outside investor in Facebook, by the way, which he used his Roth IRA self-directed to do. And see, this is our message. Like,
that's
invest
ridiculous.
in what you know. If you're Peter Thiel and you get in a deal to put money into Facebook as the first outside investor, and you see, and he's a tech guy, he saw it.
That's ridiculous.
He knew this was going to go big. He was smart. He used a self-directed IRA, but put in money from his Roth, and he knew that money is going to grow and come out entirely tax-free.
Right.
So now that came out, and Congress all in an uproar. Congress did this about 6 or 7 years ago when Mitt Romney ran for president. How long ago was that? I don't know. Whenever Romney ran for president, he had to disclose on his presidential filing that he had an IRA, and I think it was worth in like a band of like 25 million to 100 million or something like that. And it was like, how can you have that much money in an IRA?
Right.
He self-directed his IRA. Okay. Right. He wasn't just buying stocks, bonds, and mutual funds. He was investing in startups and turnarounds and all that stuff that he was in the business of. He knew he was investing in what he knew.
Right.
So
how dare he read the rules and follow them? But go ahead.
Right. And like, and like be successful at it and like make money at it. I mean, we want to punish him. So what happened is the Democrats in Congress, it was partisan. I hate to say it, but it was, they thought this was unfair. They didn't want people to be able to self-direct. And they thought this was just the rich people did it, And so now they do, some of them that are savvy do use these in a smart and sophisticated way because they want tax efficiency, right?
Of course.
They're playing by the rule book that the IRS and Congress has given them.
Of course.
So, but really the industry had to really lobby on this, and we did hard. I mean, I spent 3 to 6 months lobbying 50% of my day. Literally, I did calls with senators, chiefs of staff. I mean, I talked to I had to educate congressmen and congresswomen. I mean, we spent a lot of time in the industry, basically trying to get the message out. This is for everyone. This is not just the rich.
Right.
Sure, you could stop this, but then all these other people that are trying to just do this and build a retirement for themselves, they want to get a $1 million IRA, because that's at least what it takes to retire. You want to punish them. And so what happened is those provisions got stripped out of the bill that eventually passed the House. This is part of Build Back Better, if you remember the Build Back
Better. Okay, got it.
So the good news was it got stripped out of the House bill, and then it came over to the Senate. And it died in the Senate anyways. Even that House bill didn't pass in the Senate. So the good news was Congress got the message. It got stripped out. So there was some risk on it. We haven't heard any serious talk about it since. But there was a little bit of like, oh my gosh, Congress can prevent this from happening. And I think it was really the Peter Thiel case. It was, he was a big Trump supporter, very Republican. He was kind of a poster child that was getting like, they were wanting to stick it to him, and they had a good reason to.
I mean, that's a lot of tax money they were going to get. A lot.
Exactly. Exactly. So, but it's alive and well. I mean, that's just sad. I don't see any risk. A lot of the industry is following it now. We're paying attention to it, trying to educate Congress. And the nice thing is, there's a lot of people that self-direct now and do this, and they really are everyday people. They're Republicans. They're Democrats. They're people with 100,000 in account, 1 million in account, 10 million. Like
there's the people standing next to you at Starbucks. For those of you listening in Starbucks right now, that's where they are.
It's like the rate. It's like our clients. It's funny. They're just like it's the millionaire next door person. It's just the guy next to you. Like it's your friend you do yoga with. Like seriously.
Got it. Totally understood. So for those of you listening, welcome. I'm glad that you are here. Hopefully you are picking up opportunity, because that is exactly what we are bringing to you at this particular moment in time. We're talking today with Mat Sorenson of Directed IRA. He's got the #1 book out on self-directed IRAs, and you can actually take advantage of it by going to matsorenson.com to be able to understand in all of its detail exactly how to use what we're calling Oprah's, other people's retirement accounts, to fund your deal. Because at the end of the day, for some of us, this is how you're going to be able to get the funding that you're looking for, because it has nothing to do with your credit score at all. Yeah. It has everything to do with knowing other individuals, solving their problem, and creating value in the marketplace. So now we are going to switch to the Q&A side, because I'm curious to see if there's anyone who is listening live. If you've got a question, for those of you listening after the live recording, just know that you can follow us on Clubhouse at Cashflow Diary. Feel free to look up the Cashflow Diary cartel. Make sure you follow the club. You'll get the notifications when we go live, and you can participate inside the Q&As as well. Now, We'll take a couple of questions before we're done today, and hopefully you've enjoyed your time so far and you've been able to learn as we are talking. All right, so if you're on stage, do me a favor, go ahead and flash your mic. That way I can see if you have a question or not. And if not, then I may call on a person or two, because I'm curious to hear something that you may have to say. McKee, are you there? You know I was going to come to you.
Yes, I'm here.
Okay, so let me I'm gonna catch Matt up because he doesn't know, and I want to know. So Matt, McKee is a great, and I mean literally one of the good financial planners. You know how there's some bad ones.
Yeah.
Okay, got it. So, and I've run into her. I'm telling you, good, great, excellent educator, knows her stuff. Is one of those financial planners that make you go, why can't they all be this way, right?
Yeah.
But I just want you to know that before you hear from her, because I'm curious, McKee, when you hear what we're talking about as someone who helps people in this industry, what goes through your mind?
Well, the first thing that goes is, I guess for the average person, 401ks are simple because they have to be. The average American is not anywhere near what would be termed an accredited investor, so they do make it simple. But I am happy to hear that people are now learning about quote unquote alternative assets, right? Because real estate is just an alternative asset. Anything that isn't in a traditional investment is an alternative asset. And I've been at a trust where a lot of wealthy individuals hold a lot of their accounts because trust companies can serve as fiduciary, trustee, executor, what have you. So if you have oil and gas leases, you can have them in your IRA because you can book them at a trust company. So I'm happy to hear this being spread to the masses. So that does please me because yes, a lot of wealthy individuals have taken advantage of this for a long time.
How many longs was that exactly?
Long.
It's kind of been a secret, you know. I mean, alternative assets have been somewhat exclusive sometimes. Even within our own clients here at Directed, I mean, we have clients in funds that not anyone could just invest into. But some of them, you definitely have to have a self-directed IRA. But even then, you got to know someone to get into that fund. And alternative assets has been this very it's almost like clubbish. You got to know the people. And
right.
But the one thing I like about real estate is because some of this can be risky, you know, like investing in a tech startup, that could go to zero, you know, you could take your 401k and you could have a 01k, you know, that could go to nothing, you know. And for some clients and of ours, it's hey, they got plenty of assets and stuff. They're accredited, whatever. You know the risks. You take what you want to do. But real estate is one of those, whether it's a short-term rental or whatever your real estate's doing, it's we've seen a lot of just what I'd call everyday clients. They're not accredited. Maybe they got $500,000 of wealth. They make $100,000, $200,000. They're wanting to invest. They feel like they know and understand real estate better. It's not high risk. It's alternative, quote unquote. But at the end of the day, there's a piece of property there. It doesn't go to zero the tech startup could, you know.
No, totally understood. I agree. That's what I tell people all the time, is that the major advantage that real estate has is POC, proof of concept. There's no convincing, anyone that, hey, humans like roofs over their head. Oh, yeah, that's new. No, it's been like that. It's not going to change. Yeah. So totally understood. So I'm curious because there's another lady on stage who, if I remember correctly, is a realtor. Candace.
I'm here. Yes.
So you are a realtor, right? Yes.
I am. I play in the commercial field.
Even better. So as a realtor, given the topic that we're talking about, have you ever either worked with Directed IRA, a company like Matt's, or what are you picking up from the conversation that we're having today?
This is an amazing conversation, and I'm supposed to be on a Zoom. I'm going to my Zoom because it's so good. I love the fact that the self-directed IRA and all the other things you're mentioning how many clients I can help to deploy their capital and use that capital they have to help them out. So I am loving this conversation. So thank you, Jay, and thank you, Matt, as well. It's amazing. And I look forward to reaching out to you, Matt, if that's possible.
Yeah, absolutely. I'm loving this conversation too. So
you live this conversation.
Jay and I have got together. Just for a little background,
yeah,
Jay.
The amount of clients that I can help, the amount of clients that I can expand to and show them this, it just, a lot of the high net worth individuals I deal with, they already know, but the other ones don't know, so I'd love to collaborate and help you guys as much as I can.
Yeah.
And Candace, go ahead, Matt.
I would say we love it. We talk about helping people like you, Candace, just like to unlock the money and teach people like just what's possible. And, like I said, self-directing is not for everybody, but it's for a lot more people than are doing it right now. And they just haven't even heard about it. They didn't even know it was an option.
I didn't.
And that's what I'm talking about.
Yeah.
And Candace, you said you were doing commercial?
I do. Yeah, I do mainly commercial. I love text. Every high net worth individual has different areas that they like. But I'm also investing. So this could not help me more. So thank you, Jay. And thank you, Matt.
Well, the reason I was mentioning that is what a little known fact. 100% of all of my apartment building deals were done this way, were funded this way. 100% of them.
That's wonderful.
My commercial retail deal funded this way. My cell phone tower funded this way. Like nearly everything I've ever done funded this way, because the funds and the availability of funds is so much more. $30 trillion. That's a very large amount of money. And I think as a realtor, you're in a very unique position to be able to assist to start buying, maybe even buy some more buildings for yourself, as well as help other people do the same thing. Which gets me to my question to you, Matt, real fast. Because we talked about, yes, accredited investors. We get that. A person may not be one yet. So one, talk to that real fast. But also, I know I have, and it's been my mission from day one because of how I started, is to always involve the unaccredited investor as well, especially once I found this out. Are you seeing any sort of shifting or trends right now that are saying that maybe 5 years ago, it was like 90% accredited investor only products that were being done, but now it's, shifting a little bit?
So, good question. Let me give some context to that. So first, you don't need to be an accredited investor to self-direct. Like let's say you're going to go buy your own short-term rental. Who cares? That doesn't matter if you're an accredited investor. Where it does matter, though, is if you're someone raising capital. So let's say you're Candace and you're like, all right, I'm going to go do a fund to go buy a commercial building. I'm going to try and get 20 investors. Maybe 5 to 10 of them will use retirement accounts. We're going to go buy this commercial building or multifamily, whatever the deal is. And we're just going to do a bigger deal. I'm going to pool some money. Great. Now, in that structure of that little fund, and it could be 50 people, 100 people investing, whatever, but just, then in this small little fund here, let's keep it simple. You're going to have two options. You're going to have a few options, but there's really two primary options that people are using now that are pretty easy for a one type asset deal. The first would be just what's called a 506B offering, Rule 506B, which is kind of the private placement PPM memorandum. And in that type of private placement memorandum, you have to work with people or have an existing relationship with. You cannot advertise and solicit for investors, but you can take as many accredited people as you want and up to 35 unaccredited investors. Okay. And so if you have a big customer base or a network or friends or a rich family, whatever, that's a good option for you because you can take as many accredited people as you want. You can also bring in some unaccredited people who you may run across or may be in your network. Now, if you're like, nah, Matt, I need to go market and solicit this. I don't really have a network. I don't have business associates or a rich family or friends or whatever. I got to go out and market this thing. Okay. You're going to do typically a 506C offer. And in that offering, and this is, the last 10 years, this has been around. It used to be new, but I think it's almost been 8.
It's just like when we were doing it back in my day, it was.
I know. I've done a bunch of these with Jay over the years, by the way. So in the 506C, you can raise money, solicit, but you can only take money from a accredited investor. And so a lot of real estate funds, you'll see advertising online or they're soliciting on social media. They may say you can only be an accredited investor. That's because they're marketing and soliciting. They've chosen the advertising route. To do the advertising route, they had to limit investors to who are accredited, meaning they got $1 million of net worth, not including their home, and they've got $250,000 income. What is that? $200,000 annual income, single, $300,000 married. So you kind of got two options there. There's a few more. We could do a raising money type thing later to get into other options, but those are the primary ones we've seen. Now, what I have seen though, is you asked about what's new, Jay, is more people are actually accredited now than used to be.
What?
We're just running across more and more people. The percentage of Americans who qualify as an accredited investor has gone up as significantly.
Really?
Yeah. Now, maybe the last 3 to 6 months with the stock market going down is some people don't qualify.
It may have changed. It may have changed.
And can I pick up real quick, Jay, guys, we actually, I meant to say this earlier. We have Amy and we have a fund and we're 506C. And so we have that. So
okay. I didn't know you were working with Amy.
Yeah, I am. Yeah, I'm on the board. We're partners and we have, and this last fund that we have right now, there's a little bit of an echo, guys. I'm sorry. I don't hear it anymore. We have a 506C right now. We have where you need to have at least 100,000 on this round that we're going in on. But I love this conversation because everyone needs to be able to form these funds and do these funds and all that good stuff. Yeah. So thank you for that. Yeah. But I am, Jay. I'd love to speak to you later too about that. Because we've got a lot of stuff that
Yes, there's probably some, because if you're doing a 506B, you've only got 35.
No, 506C. No, we're 506C.
Even better than, because that means you're telling a lot of people no, and your no is my yes, 100% all the time. In fact, Matt, I know you're not doing any of these, to my disappointment, but could you talk to the people a little bit, because I'm really excited about Regulation A. I just am, because of the extra.
Me too.
Right, because of what I can do with that.
Because we need to know. We need to know. Yeah.
Reg A, also a great music genre and a great.
Boy, he did
Reg
not do
A,
that.
also a great way to raise capital under the SEC rules. But Reg A or Reg A Plus, the cool thing about that, just so everyone knows, is it gives you the best of both worlds, where you can raise a lot of money still, you can market, and they don't have to be accredited, And so that's the cool thing about Reg A.
That's the holy grail today, Matt. I'm sorry.
Yeah,
I mean,
it is.
It's just
more expensive.
Think about what we're doing right now, right? And just how the internet works in general, and the opportunity that creates for anyone listening who's willing to take this on and learn what you can begin to do. I mean, I don't know. You'll get me started. I will not shut up, because I'm very excited about it.
Yeah, I know I've connected you with some people, Jay. We got to see where that goes, because I'm curious. I get that question more and more now, especially if you have more and more clients that have gone down the route of 506B and C. They got some expertise. They know what they're doing. They got the network. They got the deal flow. Because Reg A, just like if you're going to do a $3 million apartment building, Reg A is too expensive for that, But if you're like, no, I'm doing 10 million plus, 100 million plus type funds, deals. Okay, we're talking Reg A.
Hotels, Matt. Just hotels. That's all I'm going to say.
There you go. All right. That's a monopoly move right there. We're just going hotels.
Correct. It's done with the greenhouses. It's time for the red hotels, Matt. That's what it's time for. That's really what it comes down to. So this is good. When it comes down to it, for someone who's been listening, they've listened this far, they're like, man, this feels like a lot of overwhelming information that we just threw at them.
Yeah.
I know you wrote a book. Tell us a little bit how to access it, what's in it. After I read the book, what could I do in order to bring this into my real life?
Yeah. So the book is the Self-Directed IRA Handbook. Get it at matsorenson.com. That's MAT, 1T, SORENSEN.com. And you just buy it on my site. It's $20. All right. Now, this book is pretty detailed. And like all the other companies, not all, but I'd say about a third to half of the companies that compete with us buy my book to train their staff. So
say that part again. I think, say that part again.
My competitors buy my book to train their staff on how to do their job and help people with self-directed IRA. Okay. I literally have a competitor, a new employee who posted on LinkedIn that says, I started my first day at the job, and he's showing all the swag of the company. Like, he got the company hoodie and water bottle and a copy of the Self-Directed IRA Handbook. I love that one. That was one of my favorites.
That's awesome.
But I sell them to them in bulk. I even give them a discount because I'm trying to get the content out there. But so it's designed to help you understand what to do. Now, I get it. And I've ran across clients all over. They're like, I'm just not going to read your book, man. I'm just not. And I'm like, okay. They're like, I'm just not a book reader. Okay, fine. What you can do is we have webinars every month at Directed IRA. I've got the Directed IRA podcast that I do with my partner, Mark J. Kohler. Every week we do an episode that's on self-directing. Now, one thing about self-directing is you don't need to know everything. You don't need to just, what do you want to do? I want to buy a short-term rental. Okay, you've got a lane of stuff you need to know, and we can show you what that lane of stuff is. You don't need to know about investing in oil and gas leases, in startups, in precious metals, in crypto. Skip that stuff. Just learn what you need to know to buy the assets you want to buy. And so don't get overwhelmed by the content. But at directedira.com, we have webinars you can sign up for. You can find the podcast. My YouTube channel, Mat Sorenson, has the podcast if you want to watch it. But it's on Spotify, iTunes. It's all out there. So we're trying to provide all the content someone would need. Now, you could call our law firm. I have a law firm, KKOS Lawyers, with 70 plus employees that can help advise you. You're going to pay by the hour. And some clients are like, dude, just give me an hour with one of your attorneys. They can walk me through what I need to know. In and out, done, efficient, great. Go that route too. But you don't need to. You don't need to. We give it away.
Absolutely. And that which is how I discovered it, because I didn't know what I didn't know, but it turned out that this was the very reason I gave up being a licensed financial planner. The 660, just let it all go. And I realized, okay, here's an opportunity to where I can take what I'm learning and combine it with the problem that I saw as a financial planner and begin to create some even better solutions that allows, me, my family, and everyone else to come up at the same time. So I definitely, Matt, as you guys know, I love what you do. I love the message that you and Mark have been bringing to the marketplace for quite some time. And at the end of the day, I know that doing this is something that means a lot to you because of the opportunity that it creates. I'm curious from I guess, either business building standpoint or what else? What else is there in this area that, that we have to look forward to, or that you're looking forward to happening that could maybe even change the perspective or give more opportunity? Is there something that we don't know that it could yet make this even bigger?
Yeah, there's a lot of exciting things. The first is we've seen a lot more interest in people who want to do this because of the stock market going down. People are realizing I shouldn't be invested all in the stock market. Man, it sure was easy to click 2 or 3 buttons and have my 401k invested in this, but it's been in there for 20 years and maybe I should look at this and do something else. So
is that your way of saying that all you people who did Robinhood, that now there's something else you should consider? Okay. I just wanted to make sure I got that straight. Go ahead.
Yeah, exactly. So one, I think we're going to see a lot more self-directed investors because people don't want to be reliant on the stock market. They've seen the roller coaster that it can be. Two, I think alternative assets are becoming more and more accessible, actually. People are finding out about them more. More and more Americans are, like I say, qualifying to be accredited. More and more people are investing in realizing they can invest in real estate, which is the number one asset for self-directed accounts in general. So I think for the industry overall, it's got a bright future ahead of it. It's exciting for me because I've chosen this as my entire career path, latch onto.
Right. All your eggs, this basket right here.
I'm in it, but I love it. But here's why I think it wins in the end. Really, it's about doing what the heck you want to do with your own money. And there's been so much, people have been bottled up so much and told that they can't do it or they have to do this, and they just didn't know any better. And so there is still a ton of people out there who would love to do this that have never heard about it. And we get clients that come to us all the time. I get people that read my book and they email me or see me speak and are like, oh my gosh, I've told 10 people about this already. I'll go to a dinner party and I can't stop talking about this crap. And people are like, dude, shut up about the self-directed IRAs already. The information's getting spread. And I just think because it goes down to deep down at our core, we want to do what we want to do with our money. Give us options.
Or at least be able to, we can also do what we want to do with the employer's contribution. Yes, that, not our money, but the employer's contribution, because, that in-service distribution is available, which is still backwards. But
the other thing I'll say too is IRAs have grown significantly also. So the percentage of people's money.
When you say grown, are you talking about the account balance or number of IRAs?
Both. Everything has grown. But so it used to be 401ks were the big piece of the retirement plan industry. It's flipped now. There's more money in IRAs now than in 401ks.
Well, that's good for syndicators.
That is. And that's because people have rolled over. They've left jobs with big 401ks. The baby boomers have, hit retirement plan age. They can roll out to wherever the heck they want. So now there's been a shift of IRAs now are kind of the big kid now to the 401ks. They used to be your bratty little brother,
Bratty little brother. Absolutely. Well, Matt, I definitely, I heard I think we do need to have another conversation on the whole raising capital stuff, because I know that's something I'm excited about. But we'll do that into the future. I definitely just want to say that I appreciate you taking the time to be with us today, because again, I know that in your day, there's a number of things that are always happening, but I also know that you have this mission and message that you continue to go out there to champion, to make sure that us, the little guy, that we have a shot, that we can make a difference. And again, I've said this before to you, I'm going to say it again, I appreciate in more ways than I could ever count. My entire family tree has changed because of what, if you didn't do what you do, I don't know. I just don't know. And that it has enabled myself, my kids, but just everything is so different simply for this one piece of information, but not just the information, but you stand in that gap to help us execute it as well. So I do hope that we can continue not only to work together, but just continue that message. And also, don't forget to go maybe 75 miles next week on your bike.
I'm getting back at it. That was a real bike ride. That wasn't Peloton. I was really out there, and it was in Arizona.
Don't make me started with no Peloton shade, man. Don't start.
This is summer in Phoenix. It was a tough 50, but it was good. But thanks for saying all that, and it was my pleasure, of course, being on. I had a great time. It was great just getting to see your face and catch up, TJ. So.
Likewise. All right, ladies and gentlemen, you know what time it is. It's time for you to move at the speed of instruction. What does that mean? That means go to MatSorenson.com. Get the book. Why? Because you already know you want it. If you haven't gotten it already, check the show notes. By all means, the links will be there. Additionally, though, don't just get the book. Make the call so that you can start this process. It does take some time to transfer your own IRA. And if you're thinking like I'm thinking, hey, maybe I can use other people's IRAs, then cool. Start asking those friends, because you have no idea. In fact, if you had a friend who's lost a job recently, they probably left the 401k behind. Ladies and gentlemen, it's been fun talking to you guys today. As always, I want to talk to you as much as I possibly can, but you know what? That's our time. I look forward to talking to you soon. Thank you for tuning in to today's episode of the Cashflow Diary podcast. If you'd like to learn more about how we can work together in building your short-term rental business, be sure to visit cashflowdiary.com to get in touch. You can also check out all of the links and resources I've made available to you in the show notes. I look forward to hearing from you all soon. Until next time.